Hey there traders, this is Steve Marley, the market chartist for FX Explained, and our regular weekly macro watch update for the week commencing the 7th of February 2022. Stocks rebound through volatile earnings and central bank hawkishness. Let's start off with looking at the macroeconomic and geopolitical developments from the past week. Well, on the central bank side, a more hawkish tone from global central banks last week, initially from the Bank of England, which saw a 5-4 vote to increase interest rates by 25 basis points, but 4 members wanting a 50 basis point, a half a percentage point increase, which opens the door to another rate hike next month in March, and realization for the markets that are for a more hawkish Bank of England. Additionally, also last Thursday, the ECB turned to more hawkish, with President Christine Lagarde indicating that the very high CPI data that we've seen, the inflation data, the record high data for the Eurozone, may open the door to a more hawkish tone from the central bank, the ECB, going into 2022, and a likely rate hike now being priced in for markets. Also last week, US earnings continued, and we were deep into earnings season now, and we did see both Google and Amazon post strong Q4 2021 data and forward guidance, seeing their stocks surge higher. But between those releases, we also had Meta's usage numbers and guidance, which were very negative, seeing a significant 20 to 25% wiped off of Meta last week. The US employment report came on Friday and was far stronger than expected, beating consensus estimates which had been lower due to concerns regarding the Omicron variant. And markets also remain volatile given ongoing tensions between Russia and Ukraine, although a diplomatic solution is still being sought. Now let's take a look at the global financial market developments for last week ending the 4th of February. Well, the equity markets were volatile, they were erratic, they did dip and then rebound going into the end of the week, but a basing pattern forming from late January reinforced by higher price action, led higher by US tech stocks through the week, and the Nasdaq 100 forming a basing pattern and pointing higher. On the yield side, the potential yield cap was blown out by significantly higher yields, not only in the US, but more from the UK and in Europe in here, with those more hawkish tones from the Bank of England and the ECB, sending global yields still higher. The US dollar index lost significant ground, mostly driven lower the dollar index by a strengthening of the euro versus the dollar after the ECB meeting. Gold remains kind of slightly negative after the sell-off in the latter part of January, unable to post a significant rebound, but only slightly negative in a broader range environment. Whilst oil continues its strong rally that we've seen in here from December of 2021, extending higher, now looking to target $100. And copper still sideways, a neutral tone in a broader range. Now let's take a look at the week ahead commencing the 7th of February 2022. Well, we're going to watch the potential for military or diplomatic developments regarding the tensions between Russia and the Ukraine. On the central bank, we have nothing really of note going into this week. And the data side, it's very light as well. Monday brings Chinese service PMI data. We have really nothing of note for the rest of the week into the middle of the week, on Tuesday and Wednesday. The big data point is going to be the US CPI data Thursday, with then UK GDP and German CPI on Friday. I'm going to wish you all a great trading week. If you like what you're seeing here, don't forget to hit that like button and follow us on our YouTube channel. And I'll be back with you with another macro watch next week. So traders, don't forget to catch us on the next FX Explained macro watch and all the great content on fxexplained.co.uk.